Welcome back to Talk Tickers.
Yes.
Today we're going to be diving deep into Sirius XM's Q3 2024 earnings call.
Okay.
Took place just yesterday, October 31st.
All right.
And the market seems to be cautiously optimistic,
Yeah.
with Sirius shares closing up 3.71% today
Okay.
at $27.65.
Interesting.
But as always, we're going to look beyond the headlines and analyze what these numbers really mean for Sirius XM's future.
Well, this quarter marks a pretty significant turning point for Sirius XM. I
Okay.
mean, they're now a fully independent public company,
Right.
again, after their separation from Liberty Media. But this newfound independence comes at a time when they're grappling with some declining subscriber numbers and a rapidly evolving media landscape.
Yeah.
So their long-term targets of 50 million subscribers and $1.8 billion in free cash flow seem increasingly ambitious given their current trajectory.
Yeah, no, I think that's a great point. I mean, let's start with the financials.
Okay.
What stood out to you in their Q3 performance?
Well, the 4% year-over-year decline in revenue landing at $2.17 billion is a clear indicator of the challenges they're facing. This decline was largely driven by a 5% drop in subscriber revenue,
Makes sense.
which is not surprising given their subscriber woes.
Yeah.
Advertising revenue also took a hit, shrinking by 2% to $450 million.
It's concerning that both their core revenue stream, subscriptions, and advertising are shrinking.
Right.
What's the strategy for reversing this trend?
Well, they did manage to add 14,000 self-pay subscribers this quarter.
Okay.
However, that's a drop in the bucket compared to their ambitious subscriber growth targets.
Yeah.
Their CEO, Jennifer Witz, highlighted a few key initiatives during the earnings call
Okay.
that are designed to attract new subscribers and enhance the value proposition for existing ones.
Got it.
They're expanding their free ad-supported tier to capture a wider audience
Sure.
and introducing a premium interactive bundle
Okay.
available both in-car and through their app.
So a two-pronged approach.
Yeah.
Enticing price-sensitive listeners with a free option and offering a premium experience for those willing to pay more.
Exactly.
Could you elaborate on what this premium bundle entails?
Sure, it seems they're trying to integrate their vast music library from Pandora
Right.
with their distinctive SiriusXM content.
Okay.
Imagine seamlessly transitioning from curated SiriusXM channels to personalized Pandora stations, all within a single platform. They believe this level of integration and convenience could be a game changer, especially for their existing subscriber base.
It's an interesting proposition,
Yeah.
but will it be enough to attract and retain subscribers in a market saturated with streaming options?
Right?
What else are they doing to appeal to a younger streaming first generation
Yeah.
who might not be interested in traditional satellite radio?
Well, they're acutely aware of the need to evolve beyond their traditional car-driving, premium-paying demographic.
Yeah.
That's why they're investing heavily in exclusive content
Yep.
and exploring new pricing strategies.
Got it.
One of their major announcements this quarter was a new exclusive agreement with Alex Cooper's Unwell podcast network, home to the wildly popular Call Her Daddy show.
Call Her Daddy is undoubtedly a strategic acquisition aimed at capturing a younger audience.
Right.
However, securing exclusive rights to popular podcasts doesn't come cheap.
True.
How are they managing their finances, especially in light of declining revenue?
While their CFO, Tom Barry, emphasized their commitment to financial discipline,
Yeah.
they're aiming to achieve $200 million in cost savings for 2024 through various initiatives, including business optimization and leveraging AI and automation tools.
Cost optimization is crucial,
Yes,
but it's only one part of the equation.
right.
Their ability to generate revenue, particularly from advertising, will be paramount to their long-term success.
Yeah.
Let's delve into their advertising business.
Okay.
We know ad revenue is down,
Yes.
but what's the reason behind this decline?
They're facing strong headwinds in the digital audio advertising market. The explosion of connected TV, CTV, is pulling ad dollars away from other digital platforms, including audio.
So competition from CTV
Yeah,
and the evolving preferences of advertisers are creating a challenging environment.
absolutely.
What strategies are they implementing to counter these trends?
Well, they're investing in their ad tech infrastructure to provide better targeting and measurement capabilities.
Okay.
This is crucial for attracting advertisers who are seeking more data-driven and accountable advertising solutions.
That makes sense.
Yeah.
They need to ensure their ad offerings are competitive in a market that's rapidly becoming more data-driven and results-oriented.
Exactly.
Are there any other initiatives they're pursuing on the advertising front?
They're forming strategic partnerships to enhance their offerings.
Okay.
For instance, they recently announced an agreement with LiverAmp to develop the first-to-market data clean room for audio specifically for Group M clients.
Okay.
This partnership addresses growing privacy concerns and enables more secure and targeted advertising within a privacy-compliant framework.
Improving their technology and forging strategic alliances are important steps.
Yeah.
However, are there any bright spots within their ad business despite these challenges?
Podcasting stands out as a growth area.
Okay.
They reported a 6% increase in podcast revenue this quarter, driven by strong demand and their growing portfolio of popular podcasts.
That's encouraging.
Yeah.
They've been making significant investments in podcasting, so it's positive to see some return on that investment.
Right.
Their deal with the Unwell Network with shows like Call Her Daddy is likely contributing to this growth.
Absolutely. The Unwell agreement is opening up new advertising inventory and opportunities.
Let's discuss their content strategy in more detail, particularly their approach to podcasting.
Sure.
It seems like you're leveraging podcasts to drive both advertising and subscriber growth.
Right.
How exactly are they doing that?
Well, Scott Greenstein, their president and chief content officer, explained their multifaceted podcast strategy during the Q&A portion of the call. Initially, their focus was on acquiring a critical mass of popular podcasts to bolster their ad sales business, especially as digital advertising was facing headwinds.
So building a robust podcast portfolio was the first step.
Yeah.
What came next?
Their focus then shifted to attracting top-tier talent
Right.
and developing exclusive content that could be leveraged across various platforms.
Okay.
This includes their Sirius XM channels, their micro-subscription service on Apple, and potentially even behind the paywall in the future.
So they're not just throwing money at big-name podcasts.
No.
They're strategically acquiring talent and content that can fuel growth across different areas of their business.
Exactly. They're using data and testing to determine the optimal platform for each piece of content.
Yeah.
Whether it's a dedicated channel on Sirius XM Early Access for subscribers or even major subscriber events, they're looking for ways to maximize the value of their podcast investments.
Data-driven decision-making is crucial in this rapidly evolving media landscape.
Yep.
They mentioned some specific examples of content partnerships that are already showing promise.
Yeah.
Could you remind us what those were?
Sure. They highlighted their deals with Conan O'Brien,
Right.
Smartless,
Right?
and Mel Robbins. The Conan O'Brien channel is seeing great engagement.
Okay.
Smartless is exceeding revenue projections,
Interesting.
and Mel Robbins recently signed on for a weekly live show.
It sounds like they have a diverse mix of established names and rising stars.
Right.
And they're using podcasts to experiment with different formats and content offerings.
Yeah.
Now let's address the elephant in the room. Howard Stern.
Okay.
His contract is up next year.
Yeah.
And there's been much speculation about his future with Sirius XM.
Right.
Did they shed any light on this during the call?
Scott Greenstein acknowledged that Howard is a singular talent and expressed their hope that he continues forever.
Okay.
They emphasize the value he brings in terms of awareness and audience engagement.
That's a diplomatic response, but provides no concrete answers.
No, it doesn't.
Yeah. However, he also pointed out that they've been strategically building a roster of diverse talent to appeal to a wider range of demographics, acknowledging that Howard might not resonate as strongly with younger audiences. He specifically mentioned names like Alex Cooper,
Okay.
Smartless Conan O'Brien,
Yep.
Andy Cohen and Ashley Flowers as examples of talent attracting different segments of the listening audience.
So while they're undoubtedly hoping to return Howard,
Yeah,
they're also preparing for the possibility that he might move on.
precisely. They're not standing still.
Yeah.
They're actively cultivating a new generation of stars.
Yeah.
And their podcasting strategy is playing a key role in this talent pipeline. It's a testing ground for new voices and formats, and they're clearly using it to identify potential stars for the future.
It seems their podcasting strategy is much more than just about boosting ad revenue.
Right.
It's a strategic investment in the future of their content and their ability to reach a broader audience.
Exactly.
Now let's shift gears back to their financial performance.
They mentioned achieving significant cost savings this year.
Yes.
Where are those savings coming from?
They're taking a multifaceted approach to cost optimization. Leveraging AI and automation tools across their business is a key part of this strategy.
Okay.
They mentioned their AI customer agent is exceeding expectations.
AI customer agents, that sounds futuristic.
It is pretty core.
Are they replacing human customer service representatives with robots?
It's not about replacing humans entirely, but rather about enhancing efficiency and allowing human representatives to focus on more complex issues.
Right.
The goal is to streamline operations and improve the customer experience simultaneously.
Yeah, makes sense.
Oh.
What other cost-saving initiatives did they highlight?
They also mentioned the opening of a technology center in Ireland, which will allow them to manage their product and technology investments in a more tax-efficient manner.
So strategic location choices are playing a role as well.
Yeah.
All these efforts point towards a company that's focused on maximizing value and preparing for long-term growth. Speaking of long-term growth, their commitment to their dividend was a topic of interest during the call.
Right.
Can you remind us what their current stance is on dividend payouts?
Sure. Tom Berry reiterated their capital allocation priorities during the earnings call.
Okay,
Investing in the business remains their top priority,
got it.
followed by returning to their long-term leverage target of low to mid 3 times adjusted EBITDA.
Okay.
They intend to maintain their regular quarterly dividend while they delever, continuing their opportunistic capital return posture.
So they're committed to rewarding their shareholders,
Yeah.
but are also balancing that with the need to delever and invest in growth initiatives.
Exactly. They're taking a balanced and prudent approach to capital allocation, ensuring they're positioned for both short-term stability and long-term growth.
It sounds like Sirius XM is navigating a complex and evolving landscape.
It is.
They're facing challenges,
Yeah.
but they're also adapting and innovating to stay ahead of the curve.
They're not shying away from the challenges. They're embracing change, experimenting with new offerings, and investing in their future.
Okay, so far we've covered a lot of ground.
Yeah.
We've delved into their financial performance, content strategy, advertising initiatives,
Yeah.
and cost optimization efforts.
True.
What else is worth highlighting from this earnings call?
I think it's crucial to emphasize their focus on improving transparency and communication with their shareholders.
Yes, they did mention that.
Mhm.
How exactly are they enhancing their communication?
Hooper Stevens, their Senior Vice President of Investor Relations and Finance, announced they had added an earnings presentation to their investor relations website.
Yeah.
It's a more visually engaging way to present their financial performance and key metrics.
Right.
Tom Berry added that they're exploring additional ways to enhance their disclosures around operating performance and financials, promising more to come in the future.
So a commitment to greater transparency and more detailed information for investors.
Yeah.
It sounds like they're taking concrete steps to address previous concerns about their communication practices.
They seem to be recognizing the importance of keeping investors informed and engaged as they navigate this new chapter as a fully independent public company.
That concludes part 1 of our deep dive into SiriusXM's Q3 2024 earnings call.
All right. Welcome back to Talk Tickers. Before we delve into the specifics of SiriusXM's Q3 performance, their content strategy, and their efforts to optimize costs and enhance shareholder communication, now let's shift our focus to the bigger picture, their long-term vision, and the strategic roadmap they've laid out to achieve their ambitious goals.
Okay, let's talk long-term strategy. They're aiming for 50 million subscribers and $1.8 billion in free cash flow. Those are some lofty targets.
Yes, they are.
Especially given the headwinds they're facing.
Right.
What's their plan for getting there?
Well, their strategy hinges on a two-pronged approach.
Okay.
They need to attract new subscribers
Right.
while also maximizing the value of their existing subscriber base.
Let's unpack that a bit. How are they planning to attract new subscribers in a market that's becoming increasingly competitive?
Well, they're acknowledging they need to expand beyond their traditional car-centric audience.
Okay.
This means appealing to a younger, digitally savvy demographic that's accustomed to streaming services and on-demand content.
Got it.
The free ad-supported tier and the premium interactive bundle we discussed earlier are key components of this strategy.
Right. The free tier is designed to act as a gateway drawing in listeners who are hesitant to commit to a paid subscription. And the premium bundle, with its integration of Pandora and SiriusXM content, aims to offer a more compelling and personalized experience for those willing to pay a premium. But subscriber acquisition is only half the battle. How are they planning to increase engagement and retention among their existing subscribers?
Well, engagement and retention are paramount. They're laser-focused on providing a compelling user experience, offering exclusive content that you can't find anywhere else, and continually adding value to their subscription packages. It's about making SiriusXM an indispensable part of their listeners' lives.
And pricing will play a role as well.
Yeah.
They've rolled out new pricing options and have even hinted at potential price increases in the coming year.
Yeah.
It's a delicate balancing act.
Yeah.
How do these pricing strategies fit into their overall plan?
Well, they're walking a tightrope, between affordability and profitability. They need to remain competitive in a price-sensitive market while also generating sufficient revenue to support their content investments and growth initiatives.
Right.
It's a challenge many subscription-based businesses are grappling with in today's environment.
Speaking of challenges, they're operating in a very dynamic and competitive market. Let's talk about the competitive landscape.
Sure.
Who are their main rivals and how are they differentiating themselves?
Well, they face competition on multiple fronts.
Okay.
On the traditional radio side, they're still contending with terrestrial radio stations, although that landscape is evolving as well with consolidation and the rise of online radio platforms. But their most formidable challenge comes from the digital streaming giants.
Sure.
Companies like Spotify, Apple Music, Amazon Music, and even Pandora, which they now own.
It's a crowded field. What are they doing to stand out and carve out their niche in this competitive landscape?
They're emphasizing what makes them unique.
Okay.
Their curated content,
Right.
exclusive programming,
Right.
and their focus on a premium listening experience.
Got it.
They're not trying to be everything to everyone. They're focusing on their strengths and catering to specific audience segments.
So playing to their strengths and leveraging their existing assets to differentiate themselves in a crowded market. But beyond content and pricing, what other strategic levers are they pulling to drive growth and achieve their long-term goals?
Strategic partnerships are a key piece of the puzzle.
Okay.
They're actively seeking collaborations that can broaden their appeal, enhance their value proposition, and open doors to new customer segments.
We discussed their partnerships with Walmart and ESPN Plus earlier. Could you elaborate on how these partnerships fit into their overall growth strategy?
Absolutely. Their collaboration with Walmart is a prime example. They're offering 6 months of Walmart Plus service to their Platinum subscribers at no additional cost.
Okay.
This adds value to their premium subscription and taps into Walmart's massive customer base.
Right.
In return, Walmart is offering extended trials of Sirius XM to their customers, giving Sirius XM access to a new pool of potential subscribers.
It's a win-win situation. They're leveraging each other's strengths and customer bases to expand their reach. Are there any other partnerships they've highlighted?
Their recent agreement with ESPN Plus is another strategic move. They're offering extended trials of each other's services, aiming to capture the highly engaged and passionate sports fan base. It's a smart way to cross-promote their offerings and attract new subscribers who are likely to be interested in both services.
It seems like partnerships are becoming increasingly important in today's interconnected world. Companies can achieve more by working together and leveraging their respective strengths.
Exactly. And it aligns with their overall strategy of expanding their reach, adding value for subscribers, and diversifying their revenue streams.
So we've talked about their plans to attract new subscribers, retain existing ones, and forge strategic partnerships. But what about the financial side of things? They're aiming for $1.8 billion in free cash flow, which suggests a focus on profitability and efficient capital allocation. How are they approaching this?
Their financial strategy is based on a combination of revenue growth cost optimization and disciplined capital allocation. They're investing in areas that will drive future growth, such as content and technology, while also taking steps to reduce costs and improve efficiency.
We've already discussed their cost-saving initiatives. But what about their approach to generating revenue? Are they solely reliant on subscriber growth, or are they exploring other avenues?
While subscriber growth remains a primary focus, they're also looking to diversify their revenue streams.
Okay.
Advertising, as we discussed earlier, is a key area where they're facing challenges, but they're taking steps to adapt and innovate. Podcasting in particular presents a significant growth opportunity, and they're investing heavily in that space.
It's clear that Sirius XM is operating in a complex and rapidly evolving market.
It is.
They're facing challenges,
Yeah.
but they're also embracing opportunities and taking a proactive approach to shaping their future. But their success will hinge on several key factors.
Absolutely. Adaptability will be crucial.
Okay.
They need to remain agile and responsive to evolving consumer preferences, technological advancements, and competitive pressures.
Right.
The media landscape is constantly shifting, and they need to be prepared to adapt their strategy and offerings accordingly.
So a willingness to experiment, innovate, and adjust their course as needed. What other factors will be critical to their long-term success?
Content, as always, will continue to be king. They need to consistently deliver high-quality, engaging, and exclusive content that resonates with their target audience. Content is what drives subscriber growth and retention in the streaming world, and they need to make sure their offerings are compelling enough to stand out in a crowded market.
Right. Content is what differentiates them from the competition and justifies the price of a subscription. What else should we be watching?
Their ability to forge and leverage strategic partnerships will also be critical offense. Partnerships allow them to expand their reach, enhance their value proposition, and tap into new customer segments.
Right.
We've already seen the potential of their partnerships with Walmart and ESPN Plus, and it's likely we'll see more of these types of collaborations in the future.
So adaptability, content, and partnerships, these seem to be the key pillars of their long-term strategy.
And of course, their ability to effectively monetize their content,
Right.
both through subscriptions and advertising, will be essential for their financial success. They need to strike a balance between providing value to their subscribers and generating sufficient revenue to fuel their growth. It's a complex equation, but one they seem to be actively grappling with as they explore new pricing models, innovative ad formats, and ways to optimize their cost structure.
They also seem to be making a genuine effort to improve their communication with investors.
Transparency and accountability are crucial, especially as they navigate this period of transition and embark on this ambitious growth plan.
Right.
They recognize the importance of building trust and confidence among their investor base, and their recent efforts to enhance their disclosures and communication practices are a step in the right direction.
So a company at a crossroads, facing challenges but also embracing opportunities. They're making bold moves to adapt to a rapidly changing media landscape and position themselves for long-term growth.
It's a fascinating case study in strategic adaptation, innovation, and the ongoing evolution of the audio entertainment industry.
It'll be interesting to see how their story unfolds in the quarters and years ahead.
Indeed. We'll continue to keep a close eye on their progress and bring you in-depth analysis as they navigate this dynamic and competitive market.
We've covered a lot of ground in this part, exploring their strategic vision, competitive landscape, and the key factors that will determine their success in the long term. But there's one more area I'd like to delve into before we wrap up this deep dive: their advertising business and the specific challenges they're facing in this evolving market.
You're right, their advertising business deserves a closer look.
Yeah.
It's a microcosm of the broader challenges facing the digital advertising industry and will be crucial for their financial success.
Let's take a closer look at their advertising strategy and the headwinds they're facing in Part 3. Welcome back to Talk Tickers. We've been exploring Sirius XM's efforts to navigate the changing media landscape, but let's zoom in on a specific challenge they're facing that really stood out to me: their advertising revenue. It seems like they're getting squeezed from multiple sides.
Yeah, their advertising business is facing a confluence of headwinds. It's a microcosm of the broader challenges in the digital advertising market.
Let's break it down. What are the key factors contributing to this pressure on their ad revenue?
Well, we touched on a few of these earlier, but it's worth reiterating. First, there's the rise of connected TV, CTV. It's attracting a lot of ad dollars that might have previously gone to other digital platforms, including audio.
Right, CTV is the shiny new toy in the advertising world right now. Everyone's excited about its potential for targeted advertising and reach.
Exactly. And that influx of ad dollars into CTV is creating more competition for Sirius XM, especially on the digital audio side.
So they're facing increased competition for ad dollars. What else is contributing to the pressure?
There's also a shift in advertiser preferences towards performance-based advertising.
Performance-based advertising, that's all about measurable results, right?
Yeah.
Click-through rates, conversions, that sort of thing.
Precisely. Advertisers are increasingly focused on directly attributable outcomes, and that's putting pressure on more traditional brand-building ad formats, which have been a mainstay for audio platforms like SiriusXM.
So the rise of CTV and the shift towards performance-based advertising, those are two significant headwinds. Are there any other factors at play here?
Yes, a couple more. The ongoing privacy changes in the digital advertising ecosystem are also having an impact.
Right. The changes Apple made to its iOS platform, limiting data tracking, have sent ripples throughout the industry.
Exactly. Those changes have made it more challenging for advertisers to target specific audiences and measure the effectiveness of their campaigns.
And that creates uncertainty and hesitation among advertisers, making them more cautious with their ad spending. So increased competition, a shift in advertiser preferences, and privacy changes. It's a trifecta of challenges for SiriusXM's advertising business.
And let's not forget the overall macroeconomic environment.
Right. There's a lot of talk about a potential recession, and economic uncertainty often leads to reduced advertising spending.
Exactly. When businesses are worried about the economy, they tend to tighten their belts, and marketing budgets are often the first to be cut.
So it's a perfect storm of challenges for SiriusXM's advertising business. They're facing both industry-specific headwinds and broader economic pressures.
That's why their efforts to adapt and innovate are so crucial. They recognize that they can't just sit back and wait for the market to change. They need to be proactive and strategic in their response.
What specific steps are they taking to address these challenges?
Well, they're investing in their ad tech capabilities to offer better targeting and measurement tools, which are essential in this evolving advertising landscape.
So making sure they can provide advertisers with the data and insights they need to justify their ad spending.
Exactly. They're also exploring new ad formats and partnerships to expand their reach and appeal to a wider range of advertisers.
Right, we talked about their partnership with LiverAmp to create a data clean room for audio advertising. That's a significant move to address privacy concerns and provide advertisers with a more secure and transparent way to target audiences.
They're also leveraging their podcast platform to create new advertising opportunities.
Yes, podcasting is a bright spot in their advertising business. It's a growing market with a highly engaged audience, and their investments in exclusive podcast content are attracting both listeners and advertisers.
They're also experimenting with new ad formats within podcasts, such as host read ads and branded segments, which tend to be more engaging and less disruptive to the listening experience.
So they're trying to find creative ways to integrate advertising into podcasts without alienating listeners. It's a delicate balance, but one they seem to be navigating thoughtfully.
It will be fascinating to see how their advertising strategy evolves in the coming months and years. It's a critical component of their overall business model, and their ability to navigate these challenges will play a significant role in their long-term success.
Well said. It seems like they're approaching this challenge with a combination of realism and optimism. They're not sugarcoating the difficulties, but they're also confident in their ability to adapt, innovate, and ultimately thrive in this evolving media landscape.
Their journey is a reminder that resilience, agility, and a willingness to embrace change are essential qualities for success in today's dynamic business environment.
And that's a wrap for our deep dive into Sirius XM's Q3 2024 earnings call.
We've covered a lot of ground, from their financial performance to their content strategy to their efforts to navigate the complexities of the digital advertising market.
As always, we encourage you to continue exploring these topics, delve deeper into the data, and form your own conclusions about the future of this fascinating company.
Thank you for joining us on Talk Tickers. Until next time, stay curious.